Hello traders, Dan Gippy here. In this week's trade review, I'm going to review a trade recommendation that we gave to the subscribers of our ETF investment trader, which is a longer holding period with bigger targets on it based on the daily and weekly chart. And it's going to be on the Oil Services ETF, OIH. Let's begin. At MasterTrader, we are technical-based traders. Everything starts with a price pattern. We say price is king, price doesn't lie. And then we take these pictures, and this is just very simple, 9 beautiful bullish pictures on any time frame, applies to any instrument whatsoever, stocks, commodities, currencies, ETFs, anything. Then we take this picture and we apply our other concepts that make up our entire approach. And then that includes things as what trend is it in, where support and resistance, what about retracement analysis, what about are there any positive volume issues, red or green bars ignored. Those are the other concepts. So on this OIH, it started with kind of a W bottom retest, and then there were other concepts that made it more bullish. Let's take a look. So OIH here is in a downtrend starting here in November. It has lower pivot highs, lower pivot lows, which are these red and green dots. It's just simply the computer marks a pivot, which is a pivot high is 3 or more lower high bars on the left, 3 or more on the right. So now we have a pivot here, still in a downtrend, mind you. But it then had a greater than 100% retracement. That's one of our concepts of strength, of saying the trend is over. It broke the downtrend when it closed above this prior pivot high. Then it retraced all the way back down, which is bearish in and of itself. It shouldn't have done that. But this had a nice, made a new low and snapped right back, closing above the open. That's a bullish bottoming tail. Is there a compelling pattern at the end of this bar? The answer is absolutely not. You got all this overhead messy resistance. It wasn't until the next bar where it gapped up and closed bullish into these overlapping candles, with the oil sector being strong, the other oil ETFs being very bullish, which are XOP and XLE. We were in those ETFs also in our various advisory letters. So we recommended this to our ETF trader over the high of this bar, buy the ETF, stop the low. So we're in it now. So now we're in trade management mode. So I'm going to show you this, how we objectively manage positions. And then I'll come back and we'll apply these rules to that slide. So this is, let's just call this a picture of a master trader buy setup. It's in an uptrend, and we buy a pullback and reversal on support. So let's just assume here's our entry. Our original stop is under the prior low. So now we're objectively managing. Keep your original stop. Only trail bar by bar if prices accelerate higher. So here, we're up 5 bars. We have a fantastic open gain. Go ahead and take half profits under a prior bar's low. So that's what we did there. And if it doesn't accelerate like it did here, then once you're halfway to target, it's okay to use the pivot to raise the stop. Okay, what's the pivot? I defined it on the prior slide. So this is now moving up. It retraced. I got a bullish 40% retracement. And so the key also on this slide is, unless we are getting close to the target, which my partner Greg likes to call its destination, it still has room to run. So it's okay to take half here where we talked about, but you must let the issue retrace against you, provided it's not near its destination and you're wanting to go for the bigger gains like we did in OIH. So once it now exceeds this B level, now you move your stop to this pivot low. And you repeat this process of trailing these higher pivot lows until this last bullet. when it's 80% of the way to its target, or prices accelerate like they did in this little stick example. Prices are now up, whatever, 10 bars. And, you know, if I had a 20 MA down here, I could, in my mind's eye, see that it was far away and so forth. So now let's take these concepts and apply them here. We're long the ETF here, stop under here, it's moving up, you have to let it retrace. This actually was a nice little correction bar right here, but didn't go very far, which is fine. We're in it for the bigger gains. Our target are these prior highs from this bottoming pattern, and we're getting in on the bullish retest. So here's my bullish 30-40% retracement from here to here. That's totally fine. Once it now, see this bar closes above this, now I move my stop under here. And remember I said you repeat the process of trailing pivot lows until it accelerates or gets near its target. This one was so strong it did not retrace to create a pivot. That's a sign of strength. Red bar ignored, sign of strength. Bottoming, doji bar being ignored. Higher high, higher low. This is all signs of strength. But now we're at 100% of our target. So with this wide range closing bar at the high, we issued to our subscriber, move stop now under this bar's low, this wide range bar, because that is strength right here. And if this bar fails, then it's a breakout failure at resistance. So why the heck do I want to give up huge gains? So I hope that helped. Objective trade management, great setup, great bullish action, and we're still in a full position now. We didn't even take half profits here because it didn't accelerate like the first. It didn't accelerate like this. It was just a bullish move up. So we kept our full position. Now we're moving the stop here, and we will keep a tight stop on it because it is now extended. Hope that helps, folks. Greg's course, Master Trader Swing Trading course, is what puts all the thought building modules together, so you literally know how to objectively interpret and trade any pattern, any circumstance, learn all the concepts that make up our approach. Check it out at mastertrader.com/swing trading. Good trading, everyone. See you on the next video.